In the few minutes that we have left in our first segment, let's talk retail, right? Because obviously one of the bigger stories in the market today is Carrie Target. I mean, after Walmart, you start to feel okay, feel better. Yeah. And then Target drops a bomb today, and the stock is horrible. It's down almost 12%. It's the worst day since May, and remember, they've done this to you a couple of times. Not that you necessarily have a position in the stock, but it's a reality check where we are on some parts of retail, where inventories are bloated, and it's going to take a long time to work it out.
Well, it was fascinating because there was a lot of optimism about Target. The stock was up, I think, about 25% in the last week and a half. So they've given back half. And what you heard is that their consumers, who are higher end than Walmart, are more concerned about the price of the products they're buying. And again, as I mentioned, this is the struggle between inflation and earnings. Over time, stocks follow earnings. We know that. But over this past year, it's really been about inflation. When inflation prints have been high, the market has really collapsed. And investors have been so excited recently when there have been two pieces of news that were positive about inflation coming down. What Target said is that consumers aren't buying as much. They don't like the prices. We have a lot of inventory. We have to get rid of it at lower prices, all of which is disinflationary. The market hated that. The market wants earnings again. So all retailers are going to face this challenge over the next few months. And you've seen that.
Well, not necessarily all, right? Walmart's still up.
Walmart, Lowe's.
Costco,
correct,
good.
Costco, yeah.
You just bought Walmart. I was going to wonder, okay, after I heard Target, I'm like, well, maybe he bought Walmart too early. But no, Walmart and Target are very seemingly specific stories for each.
Price-conscious consumer, I agree with that. The management of inventory is so critical here. And how are these companies doing that? Now, Walmart clearly taking inventories from 26% down to 12%. They're managing the inventory well. So I don't know that there's this universal contagion that we're all expecting in retail. Home Depot, Lowe's, both doing well. Yeah. Dollar General is a place that I've been for quite some time in the Joe T strategy. Been hiding out there as you see the trade down unfolding.
Yeah,
so,
I don't see you wanting to go into apparel retail.
No.
Look at those names today, right? Kohl's, Gap, Macy's.
Such a clothes horse.
All these earnings are coming too.
Well, those are things
and
you
these
want.
Stocks
not
are selling off big right into the numbers.
Right, but you're not going towards the retailers where the consumer is expressing themselves in the form of these are products that I want. It's these are products I need in that environment. And Walmart, whether it's, grocery, Lowe's, Home Depot, Dollar General, that's where the delivery of the necessities is unfolding.
How do you see retail, Liz?
So right now, I think that there's a lot of conflicting forces in the story. And you hear from companies like Target versus Walmart. You hear things today like the retail sales data was actually pretty good today, but it's backward looking. As we get through what's now the holiday season, if you look back in time, back to 1990, and pick the market out into industry groups, there are 24 industry groups, retail actually does pretty well consistently in November. So retail stocks, we can expect, if the history repeats itself, should do well in November. That shouldn't be a surprise. I don't think that it's hit sentiment too badly yet. But in December, they fall to the bottom of the pack. And then you have things like consumer services rise up to the top. I think what we're seeing right now in retail is that you've got, and Joe mentioned this you've got staples versus discretionary. So you've got the items that people have to buy, they don't have a choice, and they're looking to save money on it. So they're going to shift their purchases to a different place where they can save money, and those discretionary items are what's going to hurt. As we get into December, I would expect there to be a slowdown in spending, particularly in discretionary items. And I don't think that retail is going to look great by the end of the year, but I think it still looks great in November because of sort of this pent-up excitement about a holiday season.